Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So we have a bearish reversal doji on SPY, but we always need to zoom in and look for more details and see if we still have the hourly uptrend. And at this point, we had a hold of the hourly support with a double bottom. So we started the morning looking bearish, and the reason for that was that we had a significant multiple day run and we had a gap up open. The difference between how we started this morning and yesterday morning was yesterday morning we were within a channel. We had the low of Friday afternoon consolidation and the high of Friday, and we opened within that channel and we got the bull break, and that was a clear bull signal. Here we had the gap up open where we opened above that resistance level, and we were looking bearish because things were a bit overextended. The euphoria and the FOMO was a little bit overhyped. And that's the kind of scenario where, for me personally, I have a direction that I'm looking. And that doesn't mean that I just, blindly play bearish. That means that I look for bearish entries. If I don't see any, I just don't trade today. It doesn't mean that I, say, oops, I'm wrong, and I can completely flip around and try and make up a game plan on the fly and try and go bullish. That just means that I don't trade if I don't get the setup that I was looking for. So we got the pullback. We had Netflix unable to break the high of pre-market. It pulled back about $12 down to the low of the day. SPY had a significant pullback, but it held hourly support by 7 cents. So at this point, we have two setups where we're either going to see continuation into tomorrow with a bull break of 257.31, or we're going to top out with a lower high, 256.94, and then roll over and lose support, break the hourly uptrend, and give us the indication that daily consolidation is coming. It would be a bit of a head and shoulders pattern at this point if that were to play out, and it's probably going to be however the market reacts to Trump speaking tonight at 9 p.m. Eastern that's going to dictate which direction we do break. We're also watching oil, whereas oil was a key indication that we were watching for the daily bounce to get going. And now it's a key indication that we're going to be watching for daily consolidation. A reminder that when we lose the uptrend on SPY's hourly time frame, we are just looking for healthy consolidation to establish a higher low, because the last higher low that was established was all the way down at 243.67. So we're going to anticipate that at least on the initial consolidation, bulls are going to be able to hold that level. And again, oil pulling back will be an indication that consolidation is coming. So oil closed strong today, and it's keeping a higher low pattern the last 4 days in a row. The 4-hour time frame established a higher low at 48.28, and we broke two higher highs. So from here, we're watching $50 psychological resistance, and the next resistance level is 49.57. Nope, already broke that. So after 50 would be 51.85. Same thing, if we lose the 4-hour uptrend here on oil, we're going to look for oil to consolidate. And the same thing as SPY, we're going to look for a daily higher low to form because we bounced so significantly above the last consolidation base down at 44.33. So patiently waiting for consolidation. We know it's coming sooner rather than later, but we also still have the uptrends intact. I'm using the 4-hour time frame for USOIL because it trades longer, more hours in the day than SPY does, and I'm using the hourly for SPY. IWM bulls are still in full control. IWM is heavily weighted in the health sector, healthcare sector, and the biotech sector. So we've got correlation between those two. Biotech sector has seen significant strength the last couple days due to some buyouts and mergers and things like that. So a little bit of news for momentum for these bulls. When we consolidate on IWM, anything above 131.65 keeps the bulls in full control. We closed at the high of the day. The last hourly higher low is 139.39, the low of the day. And the bulls are, and that's actually not the low of the day, but 139, actually it is, I take that back. So that's the low of the day. That's our hourly support. The bulls are still in control. We're getting extended. We look at the weekly time frame. We say, all right, we saw the dump. We've seen a bounce. And IWM and SPY, they're getting back about 50% of the dump at this point. So it's time to start looking in the other direction. Like I said in the video yesterday, this is when you're starting to scale into hedges. If you have a bullish long-term portfolio with a lot of names in it and you want to protect against it, now is when you're looking to do that after the bulls get a little bit extended on their way to the upside. QQQ on the daily. Also the bearish candlestick, same with SPY. Hourly did lose the uptrend with the pullback this morning. We broke the low of Monday's afternoon consolidation, but we did see a bounce here as well. 160.11 resistance. We're looking for a lower high compared to 159.74. And again, if we see a bearish reaction to Trump here after hours, we're going to look to pull back into the upper 150s. And if we see a bullish reaction, we're going to look for continuation over 160.11. And other than that, pretty much everything is the same as SPY. 149.49 is the low on the daily. Anything above that keeps the higher low intact. Weekly time frame, the bounce at this point has taken back a significant amount of that dump, and we're going to start looking for the weekly lower high to be set and some healthy daily consolidation. Financial sector a little bit weaker. That was the reason for more of the weakness in the S&P 500 today. You can see we lost the hourly uptrend. The bounce didn't get us back towards that high of the day of 24.55, and we're looking at support of 24.03. So we're looking for an hourly lower high to be set on the financial sector and potentially an equilibrium on the hourly time frame to be watching tomorrow. And how this financial sector hourly equilibrium breaks will be important in terms of having an impact on what we're looking at on SPY. Natural gas, double top, NatGas USD. We have a double top at 376, and we hit 375 today and pulled back pretty sharply. Bulls are still trying to break this level, and we have to break it in order to see follow through. Look at the lack of resistance. After 3076, we're looking at 317.2, and then all the way up to 334. So if the bulls want to get this daily bounce going, we have to break 3076. Support is down at 3985 and then down to 2935. It is still a bear flag on the daily time frame, but the bulls are doing their best to break these resistances, and a key test is going to be coming tomorrow. Oil has the inventory report tomorrow to be watching to see if that's going to be a potential catalyst for healthy daily consolidation. That's at 10:30 a.m. Eastern. We've got the VIX here. Volatility bulls are starting to scout an entry here. We've got 9 red days in a row pulling back. We know we're going to bounce in the near term, and we're going to look to bounce and just set a lower high, but we need an hourly trend change to indicate that the daily support level has been established. So 2203 stands out as a resistance. Anything under that is just an hourly lower high, but keep an eye on VIX, TVIX, UVXY. Just like we're looking for SPY to see some healthy consolidation in the near term, we're looking for the volatility index to see a bit of a bounce in the short term as well. So again, the trend still favors the SPY bulls. They still have that hourly uptrend. We just know to be looking in the other direction when things get a bit extended, just like we were looking to run into that burning house, save that dog when we were dumping. We are looking, I don't have an analogy offhand here, but we are looking for some healthy consolidation in the near term. So again, I am very cautious in bullish positions up at these levels, only very short-term trades for me personally, and watching for the loss of the hourly uptrend. Hope you have a good night. Here at the end of the video, we got an intro done by Midas Letter. I do talks on their Canadian MJ show, and I liked the intro that they put together. It's pretty funny. So I'll leave you with that.